What's going on, WSS family? Welcome to another edition of the Market Recap. In this episode, we're going to go over the QQQ, SPY, and SMH in order to see what the current market sentiment is and where we're going moving forward. Stick around to the end of the video to see a trade idea. Let's think about the backdrop coming into today. We had the best quarter for the S&P and NASDAQ since 2020. The Dow printed an all-time high closing Tuesday. Wall Street year-end targets are clustering around S&P 8,000. This comes from JP Morgan. And Citigroup says 8,100. Semis are up 125% in a year, and retail piled in harder than any other group. A new wrinkle under the hood, though, is that money is rotating. Equal weight S&P just beat cap weight by the widest margin in 6 years. The crowded trade plus rotation is really starting to come to fruition. Let's start by taking a look at the SMH on the weekly time frame. All-time high is right at 671. Over these past 3 weeks, we've really been hovering around 660 to 670. This week's current candle is a candle of indecision and a nice doji. We're bouncing right off of the 8 weekly EMA, and remember, this entire run-up since the March 30th lows, we've been riding this EMA all the way to Valhalla. One thing to notice is, from a weekly standpoint, we're still technically overbought with RSI currently at 70. MACD is in position to cross bearish. That's still yet to happen. We can see that happening maybe in the next week or so. Until a weekly bar closes under the weekly 8 EMA, bulls are still in charge in this market, and I expect semiconductors to continue to grind higher. Even some healthy consolidation up here at all-time highs could end up to prove being a bull flag, and price will move higher. Let's take a look at the SMH on a daily time frame. We can see that today's close closed right on the daily 8 EMA, right at 620.46, and we bounced. The lows of today were right on the 20 EMA, which sat right at, let's see, 619. So really, bulls are still in charge here. I mean, you've been bouncing off of the 20 EMA this entire ride up. Here again, you get a lot of candle touches. You had a nice bullish hammer here. We moved higher, but today we had a nasty gap down, but luckily the EMAs did save us, and 611 held, which is really like our line in the sand bullish flip line, I would say. If 611 doesn't hold, I can expect price to flush down towards 580 level here, which would also coincide with the 50 EMA, which we have not touched since April 2nd. So keep that in mind. Now let's take a look at the SMH on a intraday perspective, looking at the 20-day 1-hour chart. Today was a nasty gap down pre-market as Wall Street continued to sell down semiconductor stocks, and we pretty much sold for the entire day. As you can see, every single candle within the hourly chart is a red candle here. A bit overdone in my opinion, but after such a crazy run that semiconductors have had since the end of March, we can expect some sellback here. Taking a look at this just from a pattern perspective, we're starting to see the formations of a head and shoulders pattern. This is historically a bearish pattern. When you can see 611 and what importance it holds, I mean, there are multiple touch points where 611 posed as support, but you can also see that during this last 20 days, it has acted as resistance as well. So 611.73 is the level for the remainder of this week and going into next week that we must watch if the semiconductor trade will continue higher. Now let's take a look at the QQQ from a weekly time frame. Taking a look at right where we closed today, price came down and tested the weekly 8 EMA, and we're currently sitting right in between this middle range between 725 and 713. Price was able to close right at 725, which has been the level and a weekly level really. 2 weeks ago, you had this doji candle that came right down, bounced from 725, and ultimately ended the week at 740. This week, I'll be looking for bulls to hold the 725 level, and if this is held, we can expect 736 to be our next level going into next week. Currently, RSI on the weekly time frame is 63, so there is some room for bulls to push this before we're considered overbought. And the MACD is in position to cross bearish, but that remains to be seen. Overall, all of the candles in this entire move since the March 30th lows have been riding above the 8 weekly EMA. So I'm going to keep reminding you guys, as long as we're above the weekly 8 EMA, bulls are in charge and this can grind higher. Now let's take a look at the QQQ on a daily time frame. We can really see that despite this morning's gap down, price still closed at the major 725 level. This level has posed as a resistance for a multitude of points here. You have your resistance here as well, and you can count this one as well as a resistance. So really, it's our line in the sand. This is where bulls and bears have been fighting for a few months at this point. But I think the most important thing to note is that we still, despite the gap down, we still closed above the daily 8 EMA and the 20 EMA. That, along with being able to close at a major support level, gives bulls more confidence that we will grind higher into week's end and into next week. Another thing to note is the MACD is currently in position to cross bullish for the first time since the beginning of June. This would help give bulls momentum and grind us back towards the 740 range and ultimately test all-time highs. But that remains to be seen, and let's see where they take it. Taking a look at the QQQ on a hourly time frame, we're looking at the 20-day 1 hour. Really, for this entire 20-day range, we have gone nowhere. Back from, let's see, the beginning of June, you topped out at 748, all-time high. Then you went all the way down to 700 just to come back again to 748. Almost got back down to those lows of 700 again, and right now we're smack in the middle, 725. Really has been a whipsaw month with no real follow through on the breakout. Overall, the Qs have just been range bound between 700 and 740. And unless you've been scalping trades intraday, it has been more of a risk holding overnight and swinging. So swing traders have really been in pain this month, but hopefully July gives us more continuation and easier trade opportunities. Taking a look at the SPY on the weekly time frame, we can see the same thing that we've been seeing on the SMH and QQQ. So far on the weekly time frame, we're still above the 8 weekly EMA, and we're holding at the horizontal support level of 730.95. So I'm really looking for bulls to hold on to this level as the weekly candle will close tomorrow. As long as we close above 730.95, we're still in good shape to grind higher on this move. Mind you, the MACD is in position to cross bearish, and the RSI is currently at 62. So there's still room to go higher, and I still expect an all-time high retest and a new all-time high to be made. It's crazy to think that now the QQQ and SPY can be relatively close to the same price. What a move that these tech stocks have been on in recent time. Now let's zoom in and take a look at the SPY on a daily time frame. We can see that today's candle is a candle of indecision doji, but we have closed above the 8 and 20 EMAs. And it also does look like the 8 is going to cross above the 20, so that's a good sign for the bulls and momentum in the short term. As long as 730.95 holds, bulls are still in control, and the daily MACD is going to cross bullish, so momentum will be towards the upside here. One thing to note though is you had your high at 750, a slightly lower high was also made, and currently another lower high is made. So right now price is trending down, and until we break the previous high, I would remain a bit on the cautious side, but I still am in the camp of 760 being retested and ultimately a new all-time high being made, but it's just an observation to make for and look at. For trend wise, we are trending and making lower highs, so keep that in mind. You made your lower highs, you made your lows. We technically did make a lower low here, but if we're able to grind a little higher and say tomorrow is more flat to green, we're still in good shape going into next week. Don't forget that this week is a holiday week, so majority of Wall Street is out on vacation. Volatility is expected, and most of Wall Street participants are not here. So volume's low, price can easily be manipulated. Taking a look at the SPY on a hourly time frame, we can see a very similar picture to the QQQ, where the entire month of June we've really gone nowhere. We've topped at 760, flushed down all the way to lows of 721, ripped all the way back to almost all-time high 760 again, and back to 730. It's been a very whipsaw market, and traders have really been punished holding overnight swings. Only scalpers have been able to make money here. But again, as long as 730 holds, 760 is still in the cards for the bulls, and I do believe we'll make another all-time high. If you made it this far in the video, I appreciate you for sticking around, and now let's get into the trade idea of the day. We are currently looking at PLTR. Company is Palantir Technologies, and I'm liking Palantir to the upside. We can see a very nice bounce within the last 4 sessions from lows of 106 coming all the way up to 127. And something to note is we've gotten back over the 8 EMA along with the 20 daily EMA. If we can remount 127, which has posed as a major support level line in the sand, I could see price working its way back above the 50, mounting it, and making its way back towards 150, also to reclaim the 200-day moving average as well. Taking a look at the options chain for Palantir, a contract that's really starting to pop out to me is the September 18th $150 strike. You start to take a look here, you have 10,000 open interest at this particular option, and the strike above it, the 155, has 61,000 contracts. So money is definitely starting to pour into these contracts, and we are going to want to keep our eye on this. Thanks again for tuning in, and look out for our next episode.